What's up, guys? Okay, so today we're talking about self-storage, where it's at in today's market. This takes in a historical perspective and gives us a clue on where it's going, where it will be, the dangers and opportunities. This is so important to understand today, more than any other time. One of the most important videos probably that I'll make. With that said, we're gonna get into it. If you like this content, if it's been good, please like, subscribe, and comment down below. Let me know your thoughts. Let me know what you're seeing out there in the marketplace. That is the currency of YouTube. That gives us exposure. It really helps me out a lot, and I keep making these great videos. So, thanks everybody. Here we go. So, it started out in the 70s, okay? Okay, maybe the 60s, but nobody really knew about it. But a few developers and people started to create this asset type during the 70s. It started to grow during the 80s, but in the 90s it really kind of came to be. It became actual real estate asset class. It was very alternative though. In the early 2000s, it was this now more of a traditional alternative asset. But when we got started, we were buying things at north of 8 cap for sure. We were buying things at 11 and 12 caps. Banks didn't like it. People didn't understand it. It was hard to get money to lend on. It was not viewed as a safe, secure investment. And a lot of people didn't even believe that the asset would survive. They didn't think it was going to be around. They thought it was this weird thing that had come up and would disappear.
That is weird.
Yeah.
During this time, the assets themselves acted very differently. But there were some people changing the way they looked and felt. This was happening in first-tier markets like California, even New York, and some places in Florida. They were building institutional high-end self-storage facilities. When you first looked at them, nobody thought that made a lot of sense. It's a box, it doesn't matter. Today, it's pretty much standard for all markets of any size. There's a difference, and people pay for a difference, and the expectations of the customers have changed. So how did this all occur? How'd this all happen? Well, we had the Great Recession. Before the Great Recession, it's important to know in preface, self-storage hadn't ever gone through a boom in development cycle. Yes, people were developing it. Yes, it was coming on. I'm not saying they weren't. In the early 2000s, there was lots of people building storage facilities, but nothing like a normal asset class. And it hadn't ever gotten to a point where we had surpassed market absorption. It was still hard.
I know it is hard.
The reason being is two sides. First of all, institutions didn't play in it. They didn't like to lend in it. And why not? Is because of these two reasons. Management was a pain in the frickin' butt.
It's a real pain in the butt!
Nobody knew what to do. Nobody knew how to do it. They're not long-term leases. People come and go. It was a nightmare to manage, and there were no third-party management companies to do it. So if I'm a bank, or if I'm a big investor, a fund, or, you know, anybody.
I gotta buy it, but then holy cow, I gotta deal with all this stuff. I'm not gonna do that.
The second part was models couldn't show how self-storage would survive in an economic collapse, in an economic downturn. So they didn't know. Wall Street couldn't invest in it because I'm like,
I have nothing to predict in my model if we go through a credit crisis, how this thing will work and survive. So we're not going to allocate lots of capital to it.
2008 hit. Right before 2008, a company, Extra Space really, there was third-party management companies, but no big ones and no standardized ones, especially for funds and big money. Extra Space started to really pioneer this. After 2008, they really gained speed and they really upped their third-party management through the use of technology. This was the big change for management. It was technology. They could efficiently operate, market, and capitalize through the internet. Extra Space, leveraging their technology, became a premier third-party management company. Also, what happened after 2008 is, of course, we had the Great Recession. We had our 1-in-100-year credit crisis, and self-storage performed better than any other real estate asset class. There's a bunch of reasons for that, which I'm not going to get into this video. I'll make another one, but are important. Because of that, now institutions could see it was a great model, it was stable, it survived this crisis, and now I have an option to run it without me having to be on the ground. Therefore, we started to see the boom. Now the boom, although it was caused by these two things, it also was caused by the fallout of something else, which has caused another boom this last year in self-storage. We'll get to that. The boom that we saw after 2008 was caused largely because other asset classes started to really falter. Other asset classes that were viewed as golden goose, the prize, the safest and best asset classes, single-family homes and retails, were demolished. Retail centers that held Sears and Kmart's that people used to think were as safe as a government bond. Every institution wanted to own it. It was in everybody's pension. It was just the premier. Turned out to not be as good as anybody thought. Remember, commercial real estate is valued based upon revenue and stability of that revenue. Therefore, all of a sudden, the stability of the revenue in retail centers was really, really low. As in, the idea that that revenue will be there in 10 years, now everybody questioned, and a lot of people flat out thought, no. Houses are gone, commercial real estate's gone, where's all this capital go, right, to be put in? A lot of people turn to self-storage. We see an echo of the same pattern in coronavirus. In coronavirus, the same thing happened to two other asset classes, hotels and office buildings. So now let's take a glimpse. We are now in 2021. Let's look at the landscape of real estate. We have housing, which went through a credit crisis, but they're still viable. We now have hotels, retail, office building that are all in question about their performance in the future. Some of them we already think are dead, malls, things like that. This is all in the time frame of 15 years. The real estate world has been completely turned upside down. And through it all, self-storage emerged from the ashes.
From the ashes a fire shall be woken.
Of a destroyed real estate industry. This is important because it doesn't mean it'll continue. What you're seeing is different ends of the life cycle. Those life cycles of those real estate asset classes are on their way down, and some of them may go away. It happens, things change, but fundamentally they'll shift. Malls have really shifted. They're still malls, they're just outdoor and they do totally different things, right? Attract different people. So the industries aren't gone, they're not dead, but they've morphed into something different and they're not nearly as prevalent. Self-storage is on the other end, where it's on the way up. It's in, right now, the biggest building cycle in its history, to the tune of billions and billions and billions.
Billions and billions and
more than the next highest every single year before 2008. Before 2008, we hadn't even gotten to a year, I think the highest was maybe $1 billion. Since 2012, the industry has gone over $2 billion every single year, to the tune of 4, 5, 7.5 billion in new assets being built and coming onto the market. This is not a small change. This is significant. And the assets that are coming on are nothing like the assets that came on back in the 70s, 80s, and 90s. They're high end, they offer services. Self-storage is probably at this point grown up.
I need an adult.
I am an adult!
It's a new animal. It's into something very, very different. Now, why is that important? Why is it important to know where self-storage is and the things that are driving it? Because we need to look at the future. I don't believe self-storage is going to have the performance that it did in the past. We're on that steep climb. I do not in any way, shape, or form think that self-storage is going away. You have to remember that self-storage is in its infancy, where these older ones had survived for hundreds of years. So self-storage is good and going to be good for a long time. I'm currently developing massive facilities. We are buying hundreds of thousands of square feet every single quarter. But it has changed, and the risk has increased dramatically. Why? Because we are on the end of a massive building cycle, not the beginning. In 2008, when real estate markets crushed, the retail market and the housing market primarily crushed because of too much supply. There was so much supply and not enough buyers. I mean, retail had been on a building spree like we'd never seen through the 90s, and it just wasn't sustainable. And then Amazon came and just dropped it to the ground. Right now, storage is on the other end of this building cycle. Now, I don't mean in any way, shape, or form that it's going to fall. It's not going to collapse at all. I don't believe that. But I do believe some markets, the returns will be nothing like they were before, and some markets will be overbuilt. Understanding where we're at where we're at right now in the cycle and self-storage lifespan overall tells us what we should be doing today. What should you be doing today? You need to be overly careful where you're buying and where you're building. It won't be like the last 10 years. And the recessions that happen coming up, like 2008, won't affect self-storage in the same way. It's a different animal. There's way more of it. If we had a 2008 today, the self-storage industry would be devastated across the country. You would have supply that is coming on board like crazy all over that is empty, and demand would fall. The point is, you need to be careful. Measure demand very, very carefully. Understand the revenue, if it's gonna go up, if it'll be more stable. Because on top of this massive increase in supply, we have also been at the top of valuations and prices. This is where we sit today. We're at the top. Markets are not all created the same, and self-storage markets especially. It's hyper local. That means there's opportunities everywhere.
There's no certainty, only opportunity.
We're building in locations that I think are grand slams. I'm buying in locations that haven't had a building supply in years, and they're gonna perform well, and they're gonna perform well forever for us. So it's not that it's impossible, it's not that you can't do it. You need to be careful though, and you need to understand where this asset class is in its investment cycle.